Good morning, good afternoon, good evening, and welcome to our 310th, my goodness, it's been 6 years now, 310th weekly webcast. Now, if this is the first time you're joining us, welcome. If you've been with us before, welcome back. So the way this call works is this is an AMA. Just like on Reddit, you can ask me anything. You can ask me business questions, career questions, investing questions, personal growth questions, any questions you want to. And my humble goal is to help you take your career, your portfolio, your happiness, etc. to the next level. So further ado, let's begin, and thank you. Okay. Now, I want to warn all of my students not to panic and sell stocks that you want to invest in the long run. Okay, I know the markets have been turbulent. I don't know what the market's going to do in the next week, month, 6 months, or year. But what I do know with a high degree of confidence, humbly, is that the market is going to be materially higher in 10 years. So if you're a long-term investor, and you're panic selling everything right now, be careful because you might pay higher taxes if it's not in your retirement account. Also, you might look back on the stock price and be so unhappy that you sold your favorite companies for the long run. So if I look back to 2008 when we were within 24 hours of bank machines not working, this is what the chart of most stocks look like. Those stocks today are much, much higher. Don't freak out just because of a little pullback, okay? Especially if you don't need this money for a long, long time. And we've all made the cardinal sin, myself included, of selling a stock because it went down. And now we see that stock is way higher. And as Warren Buffett said, the New York Stock Exchange is the only store in the world where consumers sell stuff when it goes on sale. Nobody can time the markets. Nobody can day trade. There's no such thing as a successful day trader. Otherwise, we know their names. That's right. So I want you to be very, very long-term focused. Now, when it comes to stocks, if I'm not sure where to put my money, what I usually do is I invest, do your research first. I invest in ticker VOO, which is the S&P 500 ETF. Now, I know with a high degree of confidence that the S&P is going to be much, 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 much higher in 10 or 20 years. I think the average return for the S&P over the next 2 decades is going to be 15 to 20%. That's right. But I promise you there will be some big down years. But I want you to be able to sleep at night and tell yourself, I don't care about the path. I care about the destination. Just be longer term focused, please. Okay. And don't ever invest in individual stocks without doing your research first. I have plenty of frameworks and templates and Excel files you can download to do your own research. I don't want you to listen to me or anybody on television or anybody in any Reddit forum, etc. I don't want you to listen to anybody that's going to influence you on what to buy or sell. I want you to do your own research. And if you do your own research, and I can teach you all the steps in my MBA degree program, but if you do your own research, then you won't sell at the worst time. Okay? I want you to be long-term focused. All right. First question I've got here is from Peter. Hey, Peter. Peter wrote, hey, Chris, do you think Tesla's in a near-death spiral? Export sales are cratering. Would ousting Elon Musk help them salvage the furniture, or would it be too little too late? I'm sure there's board meetings going on right now asking Elon Musk to really focus on the company. And this is nothing new for Elon, okay? So whenever a CEO of a company or a founder of a company focuses on a different pet projects, the smart money, meaning hedge funds or long-term investors and smart retail investors, they run for the exits and they sell the stock. Why? Because the CEO/founder is no longer 100% laser focused on execution. They've got distractions. In fact, when I used to work in the hedge fund industry, when a CEO or a founder bought a sports team as a pet project, we might look to short that company amongst other investment factors as well. Now, when it comes to Elon Musk, there is a precedent for this, okay? So if you go back to when he wanted to buy Twitter, the second he announced he wanted to buy it, the stock cratered and really underperformed the market for 6 months. We're seeing the same pattern. History repeats itself here with respect to Doge. Doge is the new Twitter for him in terms of taking his eye off the ball and not focusing on execution. Now, are things better or worse for Tesla than they were a year ago? I think much worse. Now, when I worked in the hedge fund industry, I worked for a brilliant man named Carson Levitt, who hired me at Citadel many, many years ago. I am an old man. And Carson was one of the guys that started Citadel's equities division. And what Carson taught me is not only looking at financial models and doing due diligence, but he taught me a really simplistic tip that I'm going to show you right now. Okay, so let me go over here and let's go to finance.yahoo.com. All right, and this is Carson's IP. I worked with him at another hedge fund afterwards, and he was amazing. He taught me so much. All right, so what Carson Levitt taught me was this. Okay, so look at a stock, okay, and look at where the stock price is right now. And he would always tell me this before we bought a company and invested in it, amongst many other factors. He would say this. He'd say, Chris, I see the stock is right here. It was lower down here. Were things better or worse for the company back then? Well, I would argue much better. Okay? It's a very simplistic way of looking at a financial model. I know this is not a financial model. This is a chart, or chat, as they say in South Boston. But if things were worse, things are worse here than they were back here, then it probably means that the estimates, the earnings estimates, which drives a stock, were probably much, much higher for the foreseeable future back here. So it could test lows. Okay. All right. Let's move on now to the next question. Thanks. All right, next question is, Peter wrote, thanks for your tip last week about Google's Colab for Python notebooks. Yeah, it's the best way to learn program is to use Colab in the cloud. It's kind of slow, it's not that secure, but it's dirt cheap because it's free. You wrote, it's very convenient for your Python course and the other one I'm doing. Excellent, excellent. And what Peter is referring to is, I teach every business topic, every finance topic, every personal growth topic, and I also teach tech. So I was a programmer years ago when I worked at Accenture. It's a good company. And I've got 3 MBA programs you can check out at harouneducation.com/FAQ. And these 3 programs you can start today, and I do daily group Zoom calls and one-on-ones as well in these programs here. So let me show you the course that Peter is talking about. A boot, as we say in Canada, as a very proud Canadian. All right, so what he's talking about is an elective course of mine, okay, called the Complete Python course. Now, if you purchase this product of mine, not only do you get daily group Zoom calls with me every weekday, okay, for a year, but you also get all of my MBA elective courses, including my Python course as well, okay. And in this Python course, I use tons and tons of props. I'm a very visual teacher, and I make it easy and fun for you to learn, even if you have no background whatsoever in programming. And I use a lot of objects to explain object-oriented programs, so it's fun for us. Side note, I've got the worst dad humor ever, I'm so sorry. But if you meet me in real life, I'm a tiny man. But it's okay because, you know, my humor is awful, but there's a 30-day 100% money back guarantee on all of my courses. And for those of you in my MBA programs, I'm looking forward to meeting with a lot of you this September when I have a 3-day event here in the Bay Area. It's a networking graduation event. You don't have to graduate to attend. And we're also going to go to Napa Valley, and your network is your net worth as well. Okay, let me move on to the next question. All right, next question is from Tommy. Hey, Tommy, who wrote, why would somebody consider EBITDA fake cash flow? Yeah. Okay, let me first of all explain EBITDA for those that aren't familiar with it. Okay, so when you look at an income statement, again, I'm a very visual teacher. When you look at an income statement, you've got revenue, okay? Then minus cost of goods sold, minus these expenses here. Then you get to something called EBITDA, okay? And EBITDA stands for earnings before interest, taxes, depreciation, and amortization. Why would we look at EBITDA? Why is that important for a lot of investors, especially in the private equity sector? Well, you look at it because different countries have different interest rates and different tax rates. So if you want to compare a company on an apples-to-apples basis, you look at EBITDA. Let me give you an example. All right, I've got my Apple Watch here too. Cool. All right, let's say you want to invest in a Swiss company, a Swiss watch company, and an American watch company. And let's pretend that the American company only makes these things here. Well, the Swiss company is going to have could have different interest rates in its country. And also, the American company could have different interest rates. Okay, and there could be different depreciation laws as well, and different tax rates in different countries. So the easiest way to compare a Swiss company to an American company is to look at EBITDA. Okay, so hopefully that makes sense to a lot of you. Now, when it comes to fake cash, I know what you're getting at. So companies, what they do is when they release earnings, quite often, they release two sets of financial statements. One of them the accounting people love, which is called GAAP, and that stands for Generally Accepted Accounting Principles. So I'm going to show you an example in a second. Now, the problem with GAAP is it includes non-cash crap, like depreciation, stock-based compensation, etc. Now, the finance people like me, we look at non-GAAP, okay? And non-GAAP is basically cash accounting. So let me show you what this means with a real-life example. So what I'm going to do is I'm going to go over here to sec.gov. That's the Securities and Exchange Commission website. Whoops, .gov. And what I'll do is I will type in ticker Oracle, big software company. And then we're going to go to the most recent 8K, which means an important press release. In this case, it's their earnings. I'll scroll down, I'll click here on the press release right here. And you'll see that when Oracle reported earnings, okay, they wrote here that their GAAP, meaning the accounting earnings per share, was $1.02, and non-GAAP was higher at $1.47. Now, the reason non-GAAP is higher, remember non-GAAP is for finance people. It's higher because it doesn't include non-cash crap like depreciation, amortization, stock-based comp. And so what happens is the finance people, like myself, when a company like Oracle reports earnings, the second the market closes, I'm updating my non-GAAP financial model as fast as possible. And I'm doing that to see if my earnings estimates for the next year or two changes. And if based on the new numbers I enter in, if my earnings estimates go up 20%, then the stock should gap up 20% and vice versa. That's why stocks go up and down after markets. Okay, it's based on earnings expectations. So right here, we've got this is the income statement here. And what I'm going to do is right here, this is called the reconciliation, comparing GAAP to non-GAAP. So right here, we have GAAP expenses, and then we have non-GAAP expenses. And you'll see that they add back stock-based compensation here, okay? So that this net income is higher here for non-GAAP. And the reason they do that is because it doesn't cost a company to issue shares. It costs them nothing. They just print them. And that's accounted for in GAAP, but not in non-GAAP. Same thing with amortization and other stuff here. Okay. Let me get back to Big Chris mode here. All right, next question I've got is it accurate that banks need to lend money in order to make money? Yeah. So investment banks like Goldman Sachs, for example, make a lot of money, not just from lending. Okay, they make a lot of money from doing IPOs, M&A, equity sales and trading, private wealth management, advisory work, etc. But when a traditional bank lends money, yes, they make money from it. And the way it works is this. Okay, so this is a real treasury bond. This is a real bond for the United States government. Okay, so what the government will do, the United States government, is they will sell these things directly to banks. And then banks will resell it to their customers at a bit of a markup. Okay, so it might work something like this. I'm oversimplifying it. So the government will sell a bond, right? Or a bank can buy a bond from the government as well if they want to. And they get it for $100. And then they mark it up to 101. So they lend this money out, not at $100, but at 101. It's just like wholesale and retail. So think of banks as being like Walmart or Best Buy. They buy products directly from the source, like the US government or Apple for products. Then they sell it retail with the markup. And if you have follow-up questions, let me know, please. All right, next question I've got is, Tommy wrote, can you explain why for a publicly traded company, it's constant pressure to keep the stock prices rising? And isn't this out of the control of the CEOs for the most part? Yeah. So the problem with the equity markets is they're very short-term focused. And I think that you should never invest in a tech company, for example, where the founder is no longer there. Because when a founder runs a company like Jeff Bezos or Bill Gates, they're so long-term focused, they don't give a damn. They really don't care as much about quarterly earnings. They care about earnings in 1, 2, 3, 10 years, whatever it is. Now, when the founder leaves the company, it's problematic, and I run for the exits, okay? And the reason I do that is because when the founder leaves the company, the new CEO who climbed up through the ranks is on a tight leash. And if they mess up a couple of quarters, then the board might get rid of them. Unlike the founder, who the board loves, and the founder can do whatever they want as long as they're executing longer term. And that's why Jeff Bezos and Bill Gates and Steve Jobs hardly ever got on a quarterly earnings call. So again, when a founder leaves a company, do your research first, but I usually sell. Okay, and turnarounds don't usually work in tech. In fact, if a tech company starts becoming a little bit less relevant, it's game over. That's right. And only one turnaround works in tech every decade or so. Okay. Now, when when the founder leaves a company, the new administration and all senior executives, all they care about is one thing: climbing the corporate ladder so they can make more money. Now, while they're climbing the corporate ladder, if they take a risk and innovate with a new product and it fails, they're done. And if they're successful, well, they'll make a little bit more money, whatever. And so the incentive is not to take risks. Yeah. Now, if you compare and contrast governments, the Chinese government is very long-term focused, which I think is smart, right? I hate communism. I love capitalism. But they make 100-year bets, so to speak, or strategies. And I think that's kind of smart. And a lot of people say that Chinese communists, meaning Beijing, are the best capitalists because they're long-term focused. And this is the argument that Donald Trump has. Okay, I didn't vote for him or for Kamala. I didn't vote last election. But Trump is arguing that we can't be short-term focused with the economy. Yes, there's going to be some pain in terms of tariffs going up, which could be slightly inflationary. We don't know yet. Probably will be. We need to be long-term focused. When I say we, that's he. That's his philosophy. Yeah. As Warren Buffett said, the longer the view, the wiser the intention. Yeah. And if there's Canadians on the call, I love you. Well, you guys are going to get through this. We are going to get through this. I'm Canadian, born in Canada, very proud. I live in the United States now. Okay. All right. Next up, Tommy wrote, if I purchase 2 shares in a particular company, what would need to happen in order for me to lose my initial investment, since it's not that much money? Yeah. Well, the share price would have to go to 0. The company would have to go belly up for you to lose every penny. Yeah. Which is very rare. And what happens is when a company goes belly up, goes bankrupt, they file for Chapter 11. And the bankruptcy system was set up in the United States, the courts in 1979. There's 300 courts across the country. And declaring bankruptcy is a beautiful thing, and let me explain why. As long as there's no fraud involved, what happens is this. When you declare bankruptcy, you can do personal bankruptcy too. But when you declare Chapter 11, meaning corporate bankruptcy, you have a force field around you. Nobody can touch you for 4 months. And you get your stuff in order and you renegotiate your debt. Now, over 70% of companies that declare bankruptcy, after the 4 months, they're better off than they were before, as long as there's no fraud involved in general. Yeah. All right. Next question is, can you explain how to do market research? Are there some kind of unknown resource that enterprise companies use in order to do this? What are the steps? Absolutely more than happy to do so. Yeah. Failing to plan is planning to fail. And that's why I think it makes sense to always do your own research accordingly beforehand, kind of like you have to write a business plan beforehand. So this is the product I created that's free for my MBA degree program students. See the link in the description. And this is 100 steps on how to do research on a company and come up with a target price. So up here, you'll see there's qualitative research, right? Like the management team, which we always start with the management team. Always start doing research with the management team first, okay? Because what is a company? It's a great management team. Then we look at quantitative research, like the total addressable market. Never invest in a company that doesn't have a massive market. So when I worked in venture capital, we partnered on a deal with Kleiner Perkins. And I asked my buddy that's a partner at Kleiner then, what kind of companies do you invest in? And he said, we usually don't invest in any company that doesn't have at least a total addressable market of $20 billion. And the reason is, in the unlikely event that underlying company gets 5% share of a $20 billion market, then that means $1 billion in annual revenues. Then after we look at the quantitative research, we look at the financial research, meaning the stock details, and then what we do is we build out we build out the financial model right here. Okay, and the benefit of building out the financial model is so you can value the company on a price to earnings basis. We also value on price to revenue for companies that aren't profitable and a concept called discounted cash flow. Then once we do that, we take the average target price of all three valuation methodologies, meaning price to revenue, price to earnings, and DCF, to come up with a target price. Okay, you have to do this research before investing in companies. And what comes out of this is a one-pager. This is dummy data here, where we analyze fundamentals, valuation, and lastly, technicals. And what a lot of my clients do, my students, is they print this out and put it on the back of their resume, bring it to interviews. It'll help you, I promise. Also, what comes out of this is a massive detailed report you can print out that's at least 100 pages and a dashboard as well. Now, I also have a product I'm just about to release for my MBA degree program students that allows you to use AI to do the exact same thing in more detail. Okay, now, when you use artificial intelligence to help you do investment research, please, 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 I'm begging you, double check the sources and always ask your favorite AI product for the links to the sources. But the way this product works, again, it's coming out very soon, is there's different tracks: beginner, investment, genius, all levels. You enter in the company name right here. Then what you're going to do is, and you can use any AI product, it's BYOAI. Bring your own AI, yeah. So you can select hedge fund level, AI prompts, 8th grade, which is my maturity, etc. Then what we do is we analyze the heck out of the company, including all their financial statements, every footnote on the annual report as well. And the audit report, we look at lots of case studies like Nvidia, Berkshire Hathaway, etc. And what comes out of this is a one-pager. And what also comes out of this is a massive, massive report. So look for that to hit your MBA programs in the next couple of months. Again, any of my students that buy my MBA products on my website, harounmba.com, will get that course for free. And if you're already registered for my MBA degree programs, just go to the very last lecture of your curriculum to access the courses for free. Let me move on, though. All right, next question is, can you explain what a business model is and which is better to have, a business plan or a business model? Always have a business plan. And please, I'm again begging everybody watching right now, don't quit your job to start a company until you've written a full business plan. Failing to plan is planning to fail. And I have a similar template, another template actually for you guys if you want, that will help you understand how to write a business plan. And as part of my MBA degree program, I've got what's called a venture capital boot camp. Okay, and this is based on my experience working in venture capital. I was also part of the Stanford Graduate School of Business MBA program, venture capital program as a guest lecturer. I mentor tons of students from Stanford as well. And so what we do is we write your business plan together, okay, step by step. We start with the management team. We talk about the product, the customer, go-to-market strategy, et cetera, then the financials. And what comes out of this is your business plan, okay? So focus on the business plan more so than the business model per your question. And what also comes out of this are your presentation slides. Now, if anybody is giving a corporate presentation, the best template on the planet to use is the Airbnb pitch deck. And this is the same pitch deck I want you all to use if you're going to pitch your company to raise money. Now, Airbnb came out of Y Combinator. Of course, Sequoia invested in them. It's a great company. Now, you'll notice here that on each of the slides, and there's 9 slides right here, there's no more than 3 bullet points or 3 images on each slide. And this is something that Steve Jobs used to talk about a lot. We can't process more than 3 things on any slide. Don't put too much information on a slide. And if you want better examples of this, just go and search for the 2007 iPhone release keynote that Steve Jobs gave. He uses the rule of thirds. It's kind of like how whenever you see a beautiful picture, it's usually 3 parts to it. like that epic picture that has the beach, the ocean, and the sky, the rule of thirds. And it works with videography as well. Very important. Next question I've got here is, can you please explain what's behind the strategies of value investing, growth investing, and investing in cash flow and dividend investing? Why would a person choose dividend investing over growth? Yeah, let me take a step back and first of all explain value versus growth investing. And this is crucial to understand, okay? Because you never want to invest in a company that is stuck between value and growth, because that's investment purgatory. Let me explain. So Warren Buffett is a value investor, okay? And value investors like to look at stuff that's cheap on a PE basis, price to book basis, as well as a cash flow basis, okay? And these are companies that are not growing fast, okay? So a growth investment, which is what I am, a growth investment is investing in a stock that's growing really fast that doesn't have earnings right now. And I don't want that company to have much in terms of earnings right now. And the reason that I don't want that company to have much in terms of earnings is because I want them to invest in sales, R&D, etc., to be able to grow revenue as much as possible. Later on, when the company's not growing very much, they can cut these red items here and make the bottom line bigger. But a lot of growth companies right now that seem expensive to you, they can cut R&D to the bone and cut S&M, sales and marketing, and be very profitable. I don't want that. I want them to be profitable many years from now. So what happens is, remember, growth investments, eventually you get to the law of large numbers. Companies can't grow anymore, right? Like the US economy is the biggest company in the world. You know, the GDP, which is revenue for the country, basically, will never grow more than a couple percent. So when it comes to companies that are publicly traded that are growth stocks, at some point they can't grow anymore. And so they start to slowly transition into a value stock. Never buy these stocks ever, because people are usually a value investor or a growth investor, but not in the middle, usually. And this is investment purgatory. And this transition can take a decade. Okay, it's not cheap enough for value investors to buy it. It's not growing fast enough for growth investors to want to buy it either. Don't buy this stock ever. Okay, understand if a company is growth or value right away. Now, what can make a company go from growth to value faster, or I should say investment purgatory in the middle, to value faster, is if an activist investor like Carl Icahn comes in to buy the company. And a classic quick example of this is eBay. So years ago, a lot of investors did not want to buy eBay. And the reason was because eBay had two parts to it. It had the auction business, which value investors loved because it threw off a lot of cash. And during recessions, people sell stuff more often. And it had a growth component, which was PayPal, which was growing like a weed, growing very fast. So nobody wanted to buy the stock. It wasn't a growth or value investment. So in comes Carl Icahn, who buys a big stake in the company, joins the board, pushes out John Donahoe, the CEO. Great guy, I've met him a number of times, really, really tall. He just got pushed out from Nike as well. And then Carl Icahn, what he did in order to unlock shareholder value is he split the company into two pieces, a growth investment and a value investment. The growth investment was PayPal. The value investment was a sleepy auction marketplace called eBay. And the sum of these two companies went up big time in value and were worth much, much more than eBay as a whole before the breakup. So the bottom line is this: don't ever invest in a company that's not value and that's not growth. If it's stuck in the middle, the likelihood that it's going to transition to a value stock in the next quarter, decade is quite low. It takes a long time for this to happen. Now, most students, myself included, when I did my first degree in business, when I was at McGill University 8 million years ago, most students, when they're younger, they're value investors because they're taught, I don't know, buy cheap stuff. And then what happens is once you become a more astute investor and you're longer term focused, you might morph into a growth investor. Now, growth stocks, of course, do not do well in a bear market, right? Market correction where we are right now, because people want to preserve capital, and value investments, companies with higher dividend yields, usually perform better. Now, your next question you wrote here is, I speak good. All right, give me 1 second. Why would a person choose dividend over growth? Yeah, it depends on what your investment risk profile is and your age, quite frankly. So I'm going to give you a very simplistic private wealth management tip. And this is old school. You take 100 minus your age. So if you're 80, 100 minus 80 is 20. That means 20% of your investment should be in growth stocks or riskier stocks, and 80% in value or cheaper stuff that has higher sustainable dividend yields or government AAA rated bonds. And the reason why is because you only have 20 years left to make your money back if you mess up with growth. Now, if you're 25 years old, 100 minus 25 is 75. That means 75% of your investment should be in growth stocks, okay, after you do your research, and only 25% in value. The reason I say this is old school is because there are a lot of people on this call that will live to be well over 100. In fact, there are a bunch on this call that will make it to 150. And if you don't believe me, just look at all the incredible ideas that are coming out of South San Francisco, which is the VC biotech capital of the world. And if you look at your age right now, you're all 26 years younger than you think. Let me explain why. The life expectancy today versus the 1950s is 26 years higher. So I'm a 53-year-old man-child, but I'm actually 27. And when GTA 6 comes out later this year, you ain't going to see me for a month or two. Okay? I'm going to just be nerdy out playing. Yeah. Okay. And I've got to go to a GTA background here. Sort of GTA-ish. Kind of. Okay. All right, next up, Boss wrote, hi, Chris. I love the MBA program. Thank you. In terms of accounting, how much do I have to know? Do I have to be a pro at it, or is it just general understanding in order to invest? Yeah. So I would say it's general understanding. Now, in my MBA degree program, I teach, in my courses too, which you can get on many different platforms. What I do is I teach accounting from scratch, and I don't care if my students have a lot of knowledge in accounting or not. We start from scratch. So in my MBA program, I have a lot of Ivy League grads, people that went to top 10 MBA schools, and also people that didn't finish high school. And I tell them all, I don't care what you know. I'm going to teach you from scratch. And we start one brick at a time. I'm a very visual person. Also, we question everything. Like, why is it called a balance sheet? Because assets has to equal equities plus liability, etc. So I love to use visuals. Yeah, it's just the way I teach. And when you guys give a presentation, what I want you to do is I want you to bring in props as well. Okay, very, very important to do so. And if you don't have money to buy props or a big budget, buy a prop on eBay, use it for your presentation, then sell it back on eBay. So it costs you like a 5 or 10% restocking fee. Now, I once gave a presentation where I was talking about personal finance. And I started off the presentation like this. Did you know that 70% of people that play in the NFL are broke within 2 years of retiring from the NFL? We're here today to talk about personal finance. So always use props. A lot of fun that way too. All right, let me get this out of the way. A clean desk is a happy desk. All right, next up, please keep your questions coming, guys. All right, next up, Jim wrote, good morning, Chris. Hey, Jim. Just completed the Silver MBA program and thoroughly enjoyed the coursework. Thank you. Thank you. And for the rest of your life, as with all my MBA degree program students, at 10 a.m., meaning in an hour and a half from now, you get that group Zoom call with me for life, even though you're done. And you get all my new courses for free as well, new products. Okay, Yazwanth, great to see you. First time I see you on the call. I hope you join us again. The question is this. Is getting a master's in a non-target school helpful to break into the finance industry? Along with your MBA program, is your program alone enough to get a job in a financial firm? Yeah. So let me first of all talk about the problems with business schools. Okay. Now, when I graduated from business school, I graduated from Columbia University in the year 2000. Oh my God, I'm so old. And I joined Goldman Sachs, where I spent 5 years there. And when I was working at Goldman, my buddies from Columbia and Harvard Business School, we were so frustrated because we didn't learn stuff in school that was going to help us with our career. In business school, they don't teach you how to present. That's important. In business school, they don't teach you how to network. Your network is your net worth. Relationships are more important than product knowledge. In business school, they don't teach you how to write a business plan or start a company. That's right. Ask anybody with an MBA. So do you know how to start a company now? They don't. In business school, they don't teach you how to manage your own money. They teach you how to manage other people's money. So what I did was I started writing articles about the problem with business school, and I created this book called 101 Crucial Lessons They Don't Teach You in Business School, with which Forbes humbly called one of 6 books every entrepreneur needs to read right now. And Business Insider called it the #1 book of 2016, according to Business Insider readers. And so I was so frustrated with business education. What I did was I created my own MBA degree program. And I will never let the government make it accredited. I don't want the government telling me to have a board and telling me what to teach, like bogus stuff like supply and demand curves. So I don't believe in government accreditation. Plus, it's not fair. It's not fair that you have to have an undergraduate degree to get into a master's program. That's not fair. So because somebody wasn't born with a silver spoon in their mouth, and didn't go to Harvard because mom and dad donated a lot of money, they can't join an MBA program. It's not fair. So that's the philosophy of what I do. Now, in terms of going to my program helping you get a job, absolutely. But I say this with love in my heart to all my students. I can take you to the water, but I can't force you to drink. You have to practice the methodologies I teach you, the finance and accounting and entrepreneurship and sales and AI and tech and personal growth lessons, especially networking lessons. Okay, and as Tony Robbins said, repetition is the mother of all skill. And you got to practice this stuff. If you do that, yes, you will get that coveted job. Okay, remember, you only have to be right in business one time, and failure is cool. And Michael Jordan, one of my heroes, who's way better than LeBron, that's right, younger generation, he said, I failed over and over again in my career, and that's why I succeed. And so we've had tons of students that have gotten top jobs in my MBA program over the years. I've got a student, actually, I think it was 2 years ago, that halfway through my MBA program with just an undergrad, he actually got a job at Goldman Sachs in investment banking in the same start class as Harvard MBA students. And I've had students get jobs at many, many top companies. Just search online, you'll find them. Yeah. Now, in terms of should you or anybody in this call go and get a master's degree, any master's from a university? Well, I want you to, first of all, set up 100 networking meetings to try to see if you can get that coveted job without doing a master's. Because that's why people do a master's usually, is get a better job. Okay, I want you to set up 100 informational meetings, and I can help you with that for free. So I wrote a book that I'm going to give you right now called Networking to Get Customers a Job or Anything You Want. Network is the answer to everything. And the way that you can download this, if you want to, is just go to my website, which is harounmba.com, and scroll all the way down to the bottom, and you can download this book for free right here. Okay, your network is your net worth, and relationships are always more important than product knowledge. So set up those 100 meetings, okay? And if after 100 networking meetings, you still can't get that coveted job, then do an MBA from an accredited university if you want to, or do a master's program from some accredited university if you want to. But you got to do those 100 meetings first. And think of those 100 meetings as saving you $1,000 per meeting. What? Well, a traditional MBA costs you at least $100,000, okay, including lost income. So 100 meetings times $1,000 is $100,000. Okay. All right. All right, give me 1 second to catch up here. Okay, next question. Oh, here we go. Raphael wrote, hello, Chris, how are you? I'm good, thank you. Hope you're doing well. Have you read the JFK Files that was released to the public, unredacted, Who Really Killed JFK? I went through a bunch of them just on TikTok. And other people that speak gooder than me or smarter than me read them. And the bottom line is there was a link between this guy. There was this guy, okay, in the early 60s, okay? He was a government official. And he said he thinks the CIA might have done it, okay? And then the second he said that, he was shot, okay? And the government said, according to these redacted statements, the government said that he took his own life. but he couldn't have because the gun was from the back, etc. So I saw that. There was also concern from Moscow when it happened that the United States would launch an attack against Russia because of that. And there was also speculation Lyndon Johnson was involved. I don't think he was. He was vice president back then. And there's speculation in the Kennedy files that perhaps Jack Ruby, who shot Oswald, the guy that killed Kennedy, there is speculation that Jack Ruby might have been involved with the mafia in Chicago as well. Yeah. And there's speculation also that a certain party, it could be Democrat or Republicans, might have had something to do with it as well, right? There's no concrete conclusions yet, right? There's like 80,000 pages. Yeah. Okay. And the Epstein files came out too, but I just don't understand why the names aren't listed of who's involved in that. Yeah. We'll find out soon enough. Okay. All right, next up, Kostov wrote, I'm from India studying SBIPO. Can I break into a big investment banking firm? Yes, you can, no matter what anybody tells you, if you network enough, okay? So if I told you that you could break into an investment banking firm, might not be tier 1, might be tier 2, but you can always work really hard at that firm and then move to tier 1 later. If I told you that you can get a job in investment banking if you set up 300 informational meetings with people that work at investment banks, would you do it? Follow through. I promise you this works. And you can check out my MBA program. I can help you with that as well. Okay. Again, you only have to be right in business one time. Yeah. All right. Next up, Reggie. Hey, Reggie. Reggie wrote, the stock market is designed to go up over time. It doesn't make sense to me when people freak out when stocks fall. The stock market is neutral. Yeah. And then you wrote, why the VOO instead of the SPY? And I completely agree. You have to be long-term focused. And again, we've all made that cardinal sin of selling that stock you or I love in the past because the chart looked like this. And now it's up here. I know I'm oversimplifying it, but again, the longer view, the wiser the intention. Now, your question was, why do I invest in ticker VOO instead of SPY? And I invest in the VOO when I'm not sure where to put my money. Okay. And I do it through my retirement account as well. So let's take a look together. It's usually because of the fees. So when I invest in ETFs, I love to invest in Vanguard products because they're very liquid usually and because the fees are quite low. So if we take ticker VOO right here, okay, we see here that the fee is 0.03%. That's low, dude. That means for every $100 I invest in the S&P each year, I'm only paying 3 pennies in fees. That's incredible. If you invest in a mutual fund, you might pay 500 pennies, meaning 5% every year, including hidden fees, and pay more tax. I can talk about that in more detail if you want to. Let's compare and contrast that to the expense ratio on a similar ETF for the SPY. All right, we see down here the expense ratio is higher at 9 pennies, 0.09 for those of you listening on Spotify and on the podcast. It's 0.09%, meaning 9 pennies for every $100 you invest per year. And that's why I invest in the VOO. Now, whenever you see these numbers here, you still have to go and read the investment prospectus for more details, just to make sure that it's actually correct. Yeah. And I had an example here, but I can't find it. All right. Let me move on now to the next question here. The review show wrote, I'm applying to law school currently, and I'm worried about the best ways to capitalize on a drastically higher salary in my early law years to safely get returns to save for my family's future. Yeah, okay. So first of all, before you go to law school, because I wanted to go to law school years ago, because my older brother who I idolize, he's a hero to me. He's a doctor. My dad's a doctor. So I looked into law school. Okay, I want you to ask yourself why you want law school first. And so what I did, and what I recommend all of you do, is regardless of what career you want to switch into, I want you to network and meet with people that work in that industry and ask them what a day in the life is like. And I networked with a ton of lawyers. I went down to Harvard Law to visit it and all that stuff, like I'd ever get in, and I met with lawyers. And I realized that after my meetings with lawyers, I couldn't answer this question. And this question is this. Are you a jerk before you go to law school, or is that something they teach you in law school? So I decided not to go to law school, but I do love civil rights lawyers, or if you represent me. Yeah. In terms of how to invest your money, you can sign up for my program if you want and learn a lot more about personal finance. But what I recommend doing for everybody in the call is, as Warren Buffett said, I want you to spend what is left after saving instead of saving what is left after spending. How do you do this? Well, every paycheck, every 2 weeks, if you work for another company, I want you to have money automatically taken out and put into your investment portfolio. If you're not sure what to buy, maybe buy ticker VOO, which is the S&P 500 index fund. Out of sight is out of mind. And if all you do is you put in the 22K or whatever it is, the maximum 401k amount you can invest each year. If all you did was you put that amount into the S&P 500 index fund VOO for 20 years, every year, you'd have over $1 million in 20 years and you'd sleep well at night. If your spouse did it as well, you'd have $2 million in 20 years. You can also invest in a 529, meaning an educational savings account for your kids, which works the same way. It's very, very similar, actually. And it's about 15 grand per year. If you did that for each kid for 18 years before they went to university, if they want to go to university, you'd have 700 grand per kid. 2.1 million plus the 2 million for you and your spouse, 4.1 million in 20 years. That doesn't even include the appreciation on your house as well. That's how we say it, Americans. It's house. It's not house. It's house. That's how Canadians say it. Yeah. And I do understand that times are tough and we can't save that amount of money every single year. But I want you to be long-term focused like that, okay? Yeah. And as soon as you can, I want you to buy a house, okay? As soon as you can, or an apartment. Now, when I lived in New York City and I worked at Goldman Sachs, I couldn't afford a house or an apartment until my 30s. And I bought a place, and whenever you invest, you got to be a contrarian, okay? Buy stocks or investments that people are going to like. So after 9/11, it was terrible. I saw the whole thing outside my window when I worked at Goldman Sachs. But after 9/11, the real estate market was in free fall. And I bought my first apartment on the Upper East Side, 87th and 2nd. And it felt so scary to buy right then. Who was crazy enough to buy that? That's when you buy, when nobody else is, okay? Yeah. Same thing with your favorite stocks if they're oversold, etc. Now, when it comes to real estate, I recommend writing a business plan before you buy a house. And I have a course as part of my MBA degree program called the Complete Real Estate Course that's not available anywhere else, where I teach you how to invest in your primary residence, residential investment, rental properties, commercial, etc. And this works in every country. You answer tons of questions, okay? And then what I do, I teach you everything about real estate. And what comes out of this is your income statement, your balance sheet formulas, as well as a one-page executive summary and a massive, massive business plan as well. Failing to plan is planning to fail. I want you all to do an investment write-up on real estate before you buy the property. And here's what it looks like as well. The report. It's 27 pages, works in every country in the world as well. Okay, and this might be the best investment you'll ever make is real estate. The richest people in the world, they own tons of real estate. Why? Well, not just because it goes up over time, but because they get massive tax write-offs. They get to expense depreciation, and if they own investment properties in a company, which I do, you can write off the interest as well. And very wealthy people, they pay less taxes percent-wise than we do. It's just the way it is. Yeah. And I want to help you all start your own companies. And that's the only way you can really live your life in your own terms, make a fortune, and be able to give it back to charity. So what I do, and many of you know, is a lot of my profits are used to build schools in Africa. We finished Rwanda a couple of years ago. We're doing Kenya now. And my goal is to build 1,000 schools in Africa by the time I die. Okay. And if I was a quota-carrying sales rep, to be intellectually honest, I'd be fired so many times. But let me show you the schools really quickly here. All right, so I'm going to go here to this one here. Yeah. So we're currently building a school in Kenya. Always has to be close to a water source. This is with my students. Got a great board as well. And then here's the one that we finished in Rwanda several years ago as well. So these schools are all environmentally friendly. The cost for me to do this is probably $100,000. These kids are awesome. Probably $100,000 per school with all expenses. I want to do it right. And so if I want to build 1,000 schools, $100,000 times 1,000 is $100 million. I'm going to do it. I don't know how, but I'm going to do it. And whenever you guys take on a big project, a new project, and this will tell you a lot about me, I love the feeling of taking risk. And I feel like I'm standing on the edge of a cliff. And I throw airplane parts off. And I jump. And I have to assemble the airplane before it lands. That's what drives me, is risk-taking like that. Yeah. All right. Jerome wrote, is your real estate course on Udemy or will it be? No. It's only on my website. It'll always only be on my website. Yeah. Okay. And Udemy is an important partner of mine as well. I love them. Yeah. And I actually got, I'll show you over here. They gave me an award for getting a million students. I think I got 1.6 on that website right now. It's a good company. Okay. All right, next up, Manas wrote, good morning, my dear mentor. Hope all is well. Back in black suit. Yeah, I decided to wear this. Yeah. And a great Zoom setup will do more for your career than a great Italian suit will do for your career. And in my MBA degree programs, I also teach you how to get a great setup like this as well, using the equipment you already have. Yeah. First impressions are important. All right, next up, Eileen. How are you? Eileen Dale Gracias, my student from Atlanta, who has the best last name. It's Dale Gracias, which is Spanish for thank God. Beautiful name. Eileen wrote, happy Thursday, Chris. Great to see you. You wrote, I let my friend know about you, and she's excited to meet you. She's been helping this orphanage in Tanzania for years. Excellent. And then you wrote, I think her goal is to help them formalize their structure and raise funds to support children. Apparently, Tanzania, I hope I pronounced this right, sorry, is close to Kenya and Rwanda, right in between. Excellent. Introduce me, and we're going to add that to the list. We're going to be building a school there as well. We're going to build schools in every country. And my dad, who's Egyptian, said, I don't understand, where's Egypt on this list? And so, Dad, I promise you, I'm going to build a school in Sohag, which is where my daddy was born years ago. Next up, Manas wrote, Aswath Damodaran, in his latest video, said, if the risk-free rates keep rising, the stocks will fall irrespective of recession. Also, Trump asked for a rate fall. To your thoughts on the two terms. Yeah, so the Federal Reserve, which is in charge of interest rates, is supposed to be an independent body. It's supposed to be. And the president can't tell them what to do. I don't know if that's going to happen. We'll see. I expect to see a rate cut, though, if this sell-off continues, absolutely. In terms of Damodaran, so for those of you who haven't heard of Damodaran, he's probably the best finance professor on the planet. And whenever I go into somebody's office that is more successful than me, which is every time I go into somebody's office, I always look at the bookshelf to see what books they have. And so when I worked at Citadel, I spent half an hour one-on-one talking to Ken Griffin, who's the great founder, good dude, of Citadel. And I looked at his bookshelf, and I saw books by Damodaran, who's an NYU professor, and I ordered them in the elevator after I left the meeting using my Amazon or whatever it was, my phone years ago. Yeah. Actually, no. iPhone wasn't out then. I did when I got home. Okay. All right. Okay, Manas wrote, is Powell waiting for something to break? Why is he so stubborn on rates falling? What is he thinking? And why has he been a good for 4 years, but why? Okay, yeah, so I guess your question is, why haven't he cut rates yet? They can only cut rates once they see that inflation is coming down. Now, gas prices have come down materially in the United States, which is a great thing because gas, oil, et cetera, goes into a lot of products, everything from metals to plastics, et cetera. However, we still have a lot of inflation issues with eggs and other dairy products as well. Once we see inflation come down, then I think you're going to see rates will be cut. Yeah. And if this sell-off gets a lot worse, given the fact that there's a lot of concern about tariffs, then I expect the Federal Reserve to quickly cut interest rates by probably 50 basis points. Now, over the past month or so, I have corporate clients and individual clients all over the world. And I've noticed a massive slowdown in their sentiment and their businesses as well. And I've actually seen a bit of a slowdown in my business as well. So this impacts everybody. Yeah, what's happening? Okay. And for Canadians on the call, and I'm a proud Canadian, just understand it's not like and I want Americans to understand when Canadians boo the national anthem, it's not cool. But they're not booing Americans. They're booing the policy decision about tariffs. Yeah. And of course, we have a new prime minister in Canada, Carney, who's great. I actually overlapped with him at Goldman Sachs. He's the right choice. Yeah, he's good. All right. Next up, Mike. Hey, Mike, how are you? Mike's one of my diamond clients. Wrote, "Hey, Chris, hope you're great. Great to see you, brother. Question on the Fed's remarks. Fed Chair Powell said something to the effect that they're not in a hurry to cut interest rates, and there is uncertainty. Isn't this normal?" And then he wrote, "See you Saturday. I'll see you as well for our one-on-one sessions. Thank you." Yeah, they're not in a hurry to cut interest rates until they see inflation comes down materially. Okay. And then Manas said, with Russia falling in line, is the Russian market a good buy now? Also, why didn't you ever talk about their index? And have you ever worked in their markets and with, yeah, I have. Yeah. So I've been burned in the past investing in Russia. Many years ago, when I was doing cyclical stocks and energy stocks, I invested in Lukoil and Gazprom, okay, two Russian giants. And I invested because, my goodness, I looked at the financial model. I was like, dude, these are only like 3 or 4 times my earnings estimates in 2 years. Those numbers were a lie. I don't trust the accounting. I will not invest in Russian companies. When it comes to private companies, I was actually going to go to Moscow to invest, when I worked in venture capital, to invest in one of Yuri Milner's companies. We were going to lead the round on a company called Ostrovok, right, which is kind of like Expedia, sort of, in Moscow. I did a ton of research, and I didn't feel comfortable. Yeah. I don't invest in what I don't understand. Yeah. All right. Next up, to Shippo. Great, nice to see you. First time to see you. Hope you join us again. You wrote, do I need to have a degree to study for my CFA? I think you need an undergraduate degree. I do. And I think a CFA is better than an MBA if you want to work on Wall Street. Because a CFA, there's 3 levels. Level 1, 2, 3. Level 1 is a repeat of what the finance stuff you learn in business school. Yeah. Okay. But I think it's absolute snobbery that you can't sign up if you don't have an undergraduate degree. It's not fair. Okay. And then Behruz, how are you? Wrote, hey, Chris, first, I want you to know you're a blessing to all humanity. Thank you. Thank you. Is that my mom? Pretend to be somebody else? No, I'm just kidding. No, God bless you. Thank you. Thank you. Excellent. Next question is, what is underlying asset backing cryptos, including Bitcoin, basically? Is it the dollar? Yeah. No. So okay, so a lot of investments go up over time because there's a limit on supply. And as long as demand is growing, that asset class will go up, obviously. It's kind of like land. My grandfather, God bless you, I miss you, I hope you're hanging out with my little sister, Katie. My grandfather used to say to me, Chrissy, buy land, they're not making it anymore. So when it comes to Bitcoin, there will never be more than 21 million Bitcoins ever created by the year 2140. So it's the dearth of supply. Yeah. And people are investing in Bitcoin because it's like digital gold. Yeah. And I think at some point in my life, right, might be many years from now, Bitcoin will hit $1 million per Bitcoin. Yeah. Okay, but never make cryptos more than 5% of your investment portfolio, please, because most cryptocurrencies are an absolute scam. Yeah. Okay. Tony. Hey, Tony. Tony wrote, my company provides virtual assistants, which lowers operating costs to grow revenue. You always say your network is your net worth. Is BNI worth the chapter fee for what I do? Yeah. So what I would do is a great student of mine who used to be the head of my alumni community, his name is Jason Blythe. And I want you to reach out to him because he joined it and ask him. Okay, so Jason Blythe, here he is right here. So you can take a screenshot of this and reach out to him as well. Great guy. He graduated back in 2019 or 20 or something. Ask him, please. Yeah. My gut is yes, it's worth it, but talk to him first, please. Yeah. Okay, next question is an AI bubble going forever? Are the markets pricing in Nvidia earnings? Is Nvidia revenue the bubble bursting at the moment? And what we're seeing a lot of de-risking right now, which is normal. Okay, so whenever the markets pull back, and the markets have pulled back 10% from the recent highs, which means we're in a correction, what happens is stocks with high betas tend to pull back. So we're seeing de-risking in that area. In terms of, are we in an AI bubble? A little bit, right? The bubble's kind of bursting a bit right now. There's a lot of froth involved. Yeah. All right. Next up, Aaron wrote, what's your opinion on quantitative trading? Because most trading jobs nowadays require you to have knowledge of coding languages. Could I still break in a trading role without coding knowledge? Yeah, absolutely. I would say most traders, I'm more of a long-term investor, as you all know, and I'm not really a big fan of trading. It's kind of like gambling. But most traders are not programmers. They understand technical analysis, and you can always go to my YouTube channel, do a search on technical analysis, and you'll learn everything you need to learn. I want you to be long-term focused, though. Now, there are some traders that are quantitative in nature that learn programming. If you want, you can check out my programs and then sign up for my Python course, my Excel course, etc. And I teach you all the tech skills you really need to know in order to put that to work as a trader. But please be long-term focused and never do any quantitative trading without thoroughly back testing the results. Okay. All right. Give me 1 second. So whenever my voice goes, which is rare, I use this product here called a Clear Voice. I recommend you guys buy it if you have a hoarse voice and you're about to give a presentation or a speech or an interview. I'm not sponsored by anybody on my YouTube channel. You are my customers. I don't want anybody to bias me. You know, a couple of months ago, I signed a contract with Seeking Alpha. And I cut that contract because I discovered that Seeking Alpha, which is a good data source, was providing tips as well. Not tips, but I should say recommendation on what stocks to buy. I don't like that. Okay. Okay, next question is, everything is still too expensive from a PE view, and even price to revenue on Palantir is around 5 times price to revenue. Yeah, 5 times price to revenue is not that high, okay, especially on a software cloud-based company. Yeah, high growth cloud-based software or AI-based companies with decent margins, can easily trade at over 10 times revenue. Yeah, and I invested in Palantir when I worked in venture capital. I'm no longer a shareholder right now. Yeah. Okay, next up, Behruz wrote, when you sometimes mention the story of Peter Lynch and how he invested in a company that his wife bought from. Yeah. You always say when GTA 6 releases, you are gone for a month. I kind of feel it's similar, and I saw an opportunity investing in Take-Two. What is your thought on that? I will also disappear from everyone's lives when GTA 6, I love you, man, when GTA 6 comes out. Yeah. So in order to understand whether or not you should buy Take-Two, what I would do is I would look to see what Take-Two's valuation was on a price to earnings and price to revenue basis 1 year before the release of GTA 5, masterpiece, GTA 4, even better storyline, GTA 3, Vice City, San Andreas, etc. Yeah, that's what I recommend to it. Yeah. All right. Okay. Next question is, do you think we are actually done with trillion-dollar companies? Because Google, Nvidia, Microsoft, Apple, Amazon, Meta are all more than 20 years old now, at least to say, why aren't any great gigantic companies coming out to reach the trillion-dollar market? It'll happen. It'll happen. The reason why it's happened and why it'll happen again many more times is because the government has basically printed close to 50% more of this stuff since the pandemic. That's what they've done. So the government created this inflation, this asset bubble. Yeah, that's basically it. Yeah. And if rates get lower, if rates go down, then of course we are going to get more trillion-dollar companies. Yeah. Cash is trash. Okay, next up, N.A. Keen wrote, given rising rates, inflation, and market volatility, what investment strategies would you recommend for building long-term wealth while managing risk? Yeah, a couple things. Number one, I recommend in a portfolio of stocks to never have more than 20 positions. And I don't want any stock in your portfolio to be more than 5%. I also don't want you to have more than 20% invest in any particular sector, like technology, retail, healthcare, financial services, industrials, energy, etc. Good diversification is important. Yeah. And you can also slice and dice it by looking at diversification amongst different asset classes, right? In terms of, commodities, a very small amount of cryptos. Okay. If you're extraordinarily wealthy, maybe, I don't know, art or other investment classes, bonds, etc. Yeah. And real estate, of course. Yeah. Okay. Next up, question is, Trump Family Fund is trying to buy Binance U.S. division. Also, Michael Saylor is offering 10% of preferred stock. Yeah, I saw that issue. And raising $500 million for more Bitcoin. What are your thoughts? Yeah. Yeah. So number one, there's nothing wrong with a family member investing in something that, is whose family is in government, as long as they don't get preferential treatment because who they are. Nothing wrong with that. What is wrong is government officials investing based on insider information. Now, I don't want to tell you which politician may or may not have done that, but that person's name may or may not rhyme with Rancy Relosi. I think that's wrong. I think there should be a law that government officials are not allowed to buy stocks, period. Yeah. Yeah. In terms of Michael Saylor, so Michael Saylor, he started a company called MicroStrategy, ticker MSTR, years ago. I used to go long and short his stock a lot. He's a very abrasive personality. I was once on a call when we were short, actually, his stock. It was an earnings call. And on the earnings call, an analyst asked a question he didn't like. And he said something along the lines of, I don't really want to answer that question. He ended the call right away. Right? So he's very abrasive. I think what he's done, turning his business intelligence company into a Bitcoin holding company, is not a smart idea. He should start another company for that. It seems kind of reckless to use his assets instead of putting in short-term treasuries to buy Bitcoin. I know he's done well with it, but it just doesn't make any sense to me. In terms of the offering he did, he raised a boatload of money. Okay, and I read the entire most of the prospectus, and the use of proceeds for that is going to be to buy Bitcoin, and then people can convert that note years from now into MicroStrategy stock at a 50% premium. Yeah. Next question is, George Soros wrote to every London merchant bank director, and 2 replied, and he got the job. Why do unconventional ways work so well in the past and also in the present and the future? Yeah, all you need is one informational mean to change your life, right? And my success rate, humbly, my success rate on getting meetings with people I've never met before by leveraging my methodology using LinkedIn has always been 95%. And I don't say that to impress you, rather I say it to impress by the fact that you can do it. And Manas, I know I'm going to see you today in less than 1 hour in our weekly Zoom call for MBA students. If you want, I can continue to go through your LinkedIn profile and guide you in the right direction of getting lots of one-on-ones, which you will. Yeah. And I'm going to get you a job in finance. Otherwise, you're getting a full refund. Okay? Thanks. And then Lita wrote, I did my MBA at McGill too. Very cool. Very cool. I did undergraduate degree. I did a Bachelor of Commerce there at McGill, graduated in 1994. And that's where I learned how to drink as well. I loved it. Yeah. Just kidding. Actually, I'm not. But I love Montreal. It's the most funnest place on the planet. Yeah. And then you wrote, what's the best company structure for any investment company focused on derivatives trading? Yeah. Yeah, so I would talk to a securities lawyer first. Okay. And of course, what you want to do is have them write the investment offering memorandum, have them write the subscription documents as well, and clearly define in your investor presentation, as well as in the investment offering memorandum, the degree of risk that could take place. Now, when you talk to institutional investors as well as retail investors to raise capital for your fund, I would clearly articulate and spend most of your time talking about risk management in terms of maximum drawdown you could have on a particular month. and how you manage risk with respect to derivatives. Because most people, when they see derivatives, they get scared and they think that they could lose their shirt. And Warren Buffett in the fall of 2008 called derivatives financial weapons of mass destruction. Yeah, really, really dangerous from a leverage perspective. Yeah, be careful of that stuff. And for those of you not familiar with derivatives, it means betting on the rate of change of something to make money. And derivatives is kind of the umbrella term for these exotic financial instruments, including options, swaps, forwards, futures, all that stuff. And the size of the global derivatives market is 6 times bigger than the global stock market. It's massive. I would make sure that you focus on not underwriting options, for example, okay, unless you have protection using iron condors or whatever it is. I recommend that you focus mainly on going long options if you're going to invest in options, so you don't get that the risk of having to cover someone else's trade. And let me show you a product that might help you as well as other people on this call. So as part of my MBA program, I actually have, I teach you options in a lot of detail as well from scratch. And you don't have to have a background in stocks or finance to understand options. I teach you from scratch. I also teach you on how to create 35 different option strategies, and I help you assess the risk as well. This is me buying time while this massive spreadsheet loads right here. Yeah. So yes, there's 35 different options that I teach you. Okay, here's the iron condor I was referring to. And I visualize everything as well. And I help you create one-page reports on all options as well as I teach you this. The reason that the file is big is because for each options instrument, I have 10,302 calculations in cells because I value these things using the binomial pricing theorem. Yeah. All right, next up, JK, how are you? From my recent program I launched. Great to see you, buddy. Next up, Manas wrote, most Goldman Sachs partners, including the CEOs, are non-MBAs, which is so cool. They worked their way to the top and started early as an analyst. What are your thoughts? This is true for BlackRock too. Yeah, a lot of them have MBAs. I think the number one school they recruit out of is Columbia, where I went to. As well. A lot of HBS students there. HBS, by the way, 2/3 of HBS is BS. Just kidding, sort of. I'm not. Maybe. No, I'm not. Yeah. But there are a lot of people that work their way to the top as well that don't have advanced degrees. And I'll give you a great example. So Sidney Weinberg, who was the CEO of Goldman Sachs for a decade or two, he started in the mailroom with a high school education. Your network is your net worth. Relationships are more important than product knowledge. And that's where we start the MBA program with, is discussing how to network as well. Yeah. Okay. Next, hey, Sean. How are you, Ed? Sean is one of my MBA students as well. Great guy. And his wife is in the program too, Michelle. So Sean wrote, should I offer an ownership stake / options to my team? What I got from class is sales is the most important thing, and networking, yeah. So is offering ownership options the best way to lock in commitment? Absolutely. I think it's great. Of course, I'd have your lawyer draft up these documents, okay? And then you also want to have golden handcuffs as well, to the extent that if an employee leaves, they get nothing. Okay, so the way it works with options in tech companies, for example, is you're given options in a company. It costs you nothing to do, by the way. It costs you nothing, right? You're just diluting yourself and creating more shares. But people get options. And an option, basically, in a corporate context, as an employee, means you have the right to get access to shares at a lower pricing point and make a lot of money. But the way it works from a timing perspective is when you give these options, have your lawyer set it up this way. Your employees get options every single year, but they can only cash them every 4 years. So it's like a waterfall approach. So if they want to leave after 3 or 4 years, oh my God, there's so much money they're leaving on the table. Us golden handcuffs keeps them there. And in 4 years, when they can cash those in, that's called vesting. Yeah. And this is a great way to set up as well. And a lot of startups do this so that you're not cash constrained. Yeah. And with employees in my company, it's a meritocracy. You eat what you kill. I don't believe in a high base salary. I believe in a meritocracy. I used to work in the hedge fund industry as well. And I believe in this. That whatever you eat what you kill. Make sure you have a good incentive structure there as well. And focus as much time as you can on revenue. If you focus on growing revenue everything else works. And this is going to sound strange, but for anybody in a startup, your own company, spend all your time focused on generating revenue, everything else a waste of time. And I know there's a lot of administrative garbage stuff you got to do. Outsource all that crap. Focus on growing revenue and everything else works. Okay? Yeah. All right. Next question is, will Canada ever be good friends with the US again? I know they're like brothers from another mother. Canada is going hard on tariffs, unlike Mexico. Will this have serious repercussions? I love Canada. I love Canada too. Yeah, no, Canada is good friends with America. Okay? Canada is just not good friends with a certain policy. Okay? So Canadians love Americans. We do. Okay? But we do not love this ridiculous policy. Yeah. And my dad told me that when it comes to Donald Trump, don't focus on what he says. Focus on what he does, which is astute. So my hope is that Trump is putting up these tariffs from a bargaining power position so they can settle on something else later from a deal perspective and reduce these tariffs. Yeah, yeah. But I will say, the first time he joked about, Canada becoming the 51st state, and he called Trudeau Governor Trudeau, I thought it was kind of funny, whatever. I thought he was just joking, whatever. But I wish he stopped doing that because it's insulting. We are proud people. Yeah. And then you wrote, my maternal side lives in Canada. I love the USA because of all I have gained and learned about you. Thank you. Thank you. I love the USA too. Yeah. I just don't like the tariff policy. I believe in tariffs to a certain extent without overdoing it. Yeah. All right. Next up, Ryan, who works in Veterans Affairs. He's also a diamond client of mine. Ryan, who goes by Viking Financial, wrote, hello, Chris. Hey, bud. How are you today? I'm always good. Thanks. Hope you're doing well. Is there a way to own real estate but not deal with the mundane tasks and maintain these properties? Not that handy. Yeah. Yeah, absolutely. So what I do with my investment properties, the houses I own in Canada, for example, in London, Ontario, I have an investment property manager take care of it for me. And what I do is I give up 10% of the yearly rent by doing this. But it makes sense for me because, if I have 2 months of nobody in that property, I'm losing more than 10%. So it makes sense for me as well to do that. Yeah. And if you're buying your first investment property, if you don't want to hire an investment property manager, make sure it's close to your house. Yeah. And before you do that, please make sure, Ryan and everybody on this call, that you complete a full business plan write-up on the real estate property before buying it, which you can get for my MBA students exclusively on my website here for free, this complete real estate course. Yeah. All right, let's move on now to the next question. Okay. During the 2008 crisis, a lot of people bought houses in Florida and Miami, and now they're really wealthy. Why so? Also, what's the most you could depreciate for having multiple houses in? Yeah. So the way it works is if you bought real estate in most places in the United States at the peak of the real estate cycle in late 2007, before the financial crisis in 2008, you're still up like crazy. Yeah. So I think real estate is the best long-term investment you can have. Now, just because of appreciation, but equally as important is if you own an investment company, which is easy to set up, then what you can do is you can write off depreciation, okay, and interest as well. Okay, and that way you keep if you have a high mortgage for investment property, this goes up a lot, and if this goes up a lot, then you're paying less taxes. Yeah. And that's how Donald Trump does it as well. So in the first televised debate between Donald Trump and Hillary Clinton, Clinton was making fun of him, saying, you don't even pay taxes. And, he's pretty transparent. Love him or hate him, he's transparent. He said, that's right. Because I invest in real estate, I get to use depreciation. Yeah. Now, the way depreciation works in real estate is you can only depreciate stuff above the land. You can't depreciate land because in the long run, land goes up in value. So you can depreciate, houses, for example, or apartment units. If it's residential, you have to do it over less than 30 years. If it's commercial, like renting out to a strip mall, then it's closer to 40 years. Yeah. Okay. And I'm currently looking to buy places. I've been looking for a while, actually, in Delray Beach, Florida. Why? Because it's not Boca, but it's close to Boca as well. And I'm looking for 5 minutes away from the beach as well. And what we do is we rent them out using Airbnb. In fact, this room right here I'm using. When we first moved into this house, this room paid for the mortgage because it was an Airbnb room, right? So this is just this used to be a bedroom as well. Beautiful day, yeah. And actually, the way this room works is from a tax perspective. My accountant helped me with this. What I get to do is my company, Haroun Education Ventures, rents this room from me. So when you guys start your companies, and I hope you all do, because I want to humbly help you live your life in your own terms, you got to get your accountant that does your personal taxes, your business taxes as well, and they can come up with creative and legal ways to write off more stuff so you pay less in taxes. Okay, next question is from Ray, which is, before investing in a public company, what are the first 5 key factors one should check for? And then you wrote year-over-year revenue growth, profitability, debt levels, free cash flow, quality of management, insider information, ? Yeah, so what I like to do, and I'm going to show you my investment analysis framework, which all my MBA degree students have accessible in the MBA degree program, along with a gazillion other templates. The very first thing I like to look at is the management team, okay? Always start with the management team, because what is a company? A company is the quality of the underlying management team. They don't teach you that in business school. Another important thing to look at is the total addressable market. Never invest in a sector or start a company in a sector that has a tiny market size. Otherwise, if you get 5% size of $1 million market, that's de minimis. It's $50K in revenue, which is not sustainable in the long run if you want to scale it. After those things, so I got to give you 5 here. I tend to look at the income statement forecast. That's 3. Then the cash flow statement. That's 4. And then all of that leads to the valuation, right? And you have to be able to quantify stuff. If you have an investment thesis that is all qualitative based, that's an opinion and not a thesis. You need data always to back up your numbers and your forecasts, always. Yeah. And that's why I teach accounting as well in the MBA program. All right. Okay, you wrote Intel appointed Lip Bhutan. How to understand if he was successful until now or not? Let's do this. This might be fun. So let me go through it. So I became bearish on Intel the second that Dr. Andy Grove stepped away. And Dr. Andy Grove was one of the founders of Intel. The second a founder leaves a company, and all the founders leave, don't invest. Yeah. And one of the many reasons why Nvidia has done incredibly well is because the founder still runs the company, Jensen Huang. Only invest in founders. All right, so you want me to do a little bit of due diligence on this dude, this new CEO of Intel. All right, let's check it out here. All right, chairman of Intel. Let's see what he's done. It'll take me a lot longer than just 2 seconds to look at it here. Okay, so where was he before? All right, he's been on lots of boards. Let's go to the real meat of it, though. All right, so he's been on the board of Intel for a while. Before that, he worked in Cadence Design Systems, on the board of SoftBank, Hewlett-Packard, which means nothing to me. Yeah, I don't really know. I wouldn't say buy the stock just because of this. I have to do a lot more research, but I don't know if he's really done anything innovative. He might just be an operator like Tim Cook. I don't know. Yeah. I can't really form an opinion. Yeah. What you can do, though, is you can use ChatGPT. Okay. And then Intel, new CEO. Give me 5 pros and 5 cons to his track record in terms of restructuring Intel and making rev grow again. And of course, everything you do here in ChatGPT, what you need to do is you always need to double check all the sources. And what I did was I asked ChatGPT in settings to always give me sources as well. Okay, so you got to double check all this stuff here. All right, 20 years of experience, is a pro. Yeah, software because of cadence design as well. Okay, and Intel's kind of morphing into a bit of a software company as well because they bought a lot of software companies, similar to what IBM did under the tutelage and leadership of Lou Gerstner. And if you want to understand turnarounds in tech or any company, I want you to read a book by Lou Gerstner, who's the CEO of IBM for years. And that book is called Who Said Elephants Can't Dance? Okay, so he reinvented the company. Okay, maybe this is one of the reasons he was hired, because he restructured the company, significantly boosting revenue and the share price. Okay, I get it. Engineering focus, strategic vision. This might be the reason. Okay, so what I'm going to say is the bottom line why he was probably hired is because at Cadence Design System, he restructured it and helped to boost revenue and the share price. Period. And that's all Intel investors and the board of directors of Intel cares about, is boosting the share price and revenue. That's all that matters. Let's see if there's any negatives here. And of course, we have to do a lot more research than just this. Okay, the negatives. Okay, yeah, Intel's going to be tough to turn around. That's not really a negative on him. Okay. No. Tell me cons on him. Yeah, I get it. Okay, but rinse, lather, repeat. Just keep doing that analysis over and over again. You can also go to Glassdoor.com and see how people that worked for him rated him in the past, and they quantify out of a score of 100. Yeah. Oh, also, what you need to do is you need to go to the annual report of Cadence just to do research on what his background is. Which is disclosed in the annual report as well. Too early for it to be disclosed in Intel's financials. Next question is, do you think that silver will catch up with gold? It seems like its price is falling behind. Yeah. So gold tends to do well in times of economic uncertainty. Okay, so gold, it reached a record over $3,000 per ounce right now. So when people are scared, they buy gold. And my biggest position in the fall of 2008, my biggest long position in my hedge fund was gold, ticker GLD. Silver tends to do well only when cyclical-based companies are doing well, because silver is a big input into a lot of products that we use. So if GDP grows a lot, then there's high correlation. Silver will do well. Gold better in when times are bad. Silver better when times are good. Yeah. All right. Next question is, with Trump's mood, are green cards H-1Bs out of the question now? Are only engineers needed in the Valley now, when a lot of tech companies have non-tech founders like Brian Chesky? No, I don't think he'll do too much with H-1Bs or green cards, because the success of this country, America, is predicated on smart people coming to America. Yeah, a lot of immigrants, like here in the Bay Area, in the Valley where I live. About 50% of all successful engineers and executives I know were born overseas. And I think that would destroy the American economy in the long run if you stop that. So I don't see a stoppage to that. What I do see a stoppage to is if anybody has any sort of ties to organizations that are deemed terrorists or not friendly to the United States, and you have an H-1B or a green card, you will be pushed out of the country. And of course, there are precedents for that you can read the news right now for that happening. Yeah, I think that's the right call. Okay, can you please share the proportions for your energy shake? Yeah, absolutely. So every single Sunday, what I do is I prepare 7 bottles in blender bottles, and I put greatest hits of all antioxidants into it when I juice. And so what's in that for me is the following. Okay, kale. Okay, in my juicer. Okay, kale, broccoli. Broccoli has a lot of antioxidants, and it's great to juice. A lot of people don't do that. Raw ginger root. Okay. Lemon, that way I get vitamin C. Don't use oranges because it's too many calories, okay, especially carbs with a sugar. I also juice sometimes beets, although it makes my teeth red, but it's healthy for you. What I also put into is a scoop of whey protein, organic of course. I also put in acai, which is a South American fruit that gives you energy. I put in super omega fatty oil, just a little bit as well. I put in flax seeds, because if you're a guy, you have to do that from a cancer prevention perspective. And what I also put in is raw mushroom extract, aloe water, and then blueberries as well, which is an antioxidant. Yeah, and I fill it all the way up to the top. I put 7 of them in my fridge every week, and that's what I consume throughout the day. Now, my first meal of every day is a bulletproof coffee. Okay, bulletproof coffee, and this is going to sound out there, man. But basically, it's got MCT oil, which is coconut oil. Be careful with this. Talk to your physician first, your GP, because it can give you stomach aches. What I also put in this, and this is going to sound really out there, is a tablespoon of grass-fed organic butter. And people have been doing that in their coffee and tea for hundreds of years, putting butter. And it tastes like cream, that's it, right? But if you do that, it gives you this incredible cerebral intensity, this ability to think really quickly and speak much gooder as well. It helps a lot, yeah. And then what I do is throughout the day, I drink an entire thing of vodka cranberry. No, an entire thing of water. So I'm a bit behind schedule right now. I should be at 9:30, which is down here, okay? And then what's in here is I put just a very healthy sweetener, just as 30 calories worth, just to add a little bit of flavor. So I actually finish it. Yeah, yeah. And this helps a lot. Yeah. That's my diet. And at night I make a massive salad. I love salad with avocado and feta cheese and apple cider vinegar and all that stuff. And I take a ton of vitamins every single day. Okay, and I'll show you right here. They're vitamins and herbs. I know it sounds cray-cray. I can walk in you some more detail on this as well. And the reason I do it, and I take 1 or 2 pills every now and then, and I got the idea from Ray Kurzweil, who's the head of engineering at Google. The reason I do it is because we are all deficient in certain vitamins. We don't know what they are scientifically yet. And if you blast your body with 100% of the daily recommended value, the probability of you getting sick goes down over time. And the reason I do this is because I do this because I want to nip in the bud any sort of diseases that I will ever get. And I had my DNA sequence years ago, and it said with a high degree of probability that I'm going to get AMD, meaning age-related macular degeneration. My eyesight will go down, which my grandfather had as well. It's hereditary. Thanks, Grandpa. I love you and miss you, but thanks for the eye problem. Now I take an organic zinc substance to nip in the bud, so I never get that. Yeah. And what I want you all to do, please, is talk to your older aunts, uncles, parents, grandparents, all that stuff, to see what diseases they had, because there are preventative diet stuff you could do to stop you from getting it genetically. Ooh, we just lost a lot of people there. Okay. All right. All right. Next question is, let's say I like Nvidia and I've decided to hold it for several years. However, from time to time it falls every 2 to 3 months and later recuperates. Why should I sell it completely when it's high and then buy it back when it's low? Yeah. So if it's in your retirement account, you can certainly do that. You won't pay taxes. If it's not, it wouldn't be a smart idea because you'd be paying a lot of taxes. Yeah. Now, the reason why I don't advise trading is because it's so time consuming. I know it's fun, but also in the long run, your favorite stocks are going to be up here. So why waste your time buying and selling? Yeah. Next up, we've got, what do you think of this portfolio distribution for somebody who's 45 years old? Stocks 50%, residential real estate 25%, bonds 15%, cash 5%, cryptos 5%. Yeah. Yeah, I'd have to know a little bit more about the quality of the stocks you have. So if I take as I mentioned earlier, if you take 100 minus your age, which is 45, right, that equals 55. So 55% of your investment should be in, slightly riskier stuff. Yeah. Yeah. Next up, we have Toby. Toby wrote, hello, Professor. Good to be here. Good to see you. What do you think Canada should do to minimize the negative impact of U.S. tariffs and U.S. aggressive foreign policy? Yeah. Yeah, I would say that Canada can do a couple things. Number one, focus on buying only Canadian, which a lot of people are doing right now. And I've never seen a level of national pride as high as it is right now. It makes me proud to be Canadian. Okay, we're going to be best friends with America forever. Okay, we just got some sibling rivalry, growing pains to go through right now. Another thing Canada can do is they can join the EU. It can be part of the European Union. Yeah. And I think they should look at that closely as well. Yeah. They also have to try to find, and I'm part of the problem for Canada, but they need to figure out how to stop the brain drain. So a lot of people in Canada move to the United States. Yeah. The Canadian government's got to find a way to encourage people to not move to the United States, and also encourage them from a tax perspective to want to start companies. And they need to cut taxes as well in Canada. Taxes are way too high. It's disgusting. Yeah. And the reason why taxes are higher in Canada, one of the reasons is because in Canada, unlike the United States, there's no term limits, right? So, a moron like Justin Trudeau, sorry, but it's true, can be prime minister for a gazillion years. What I do like about the U.S. system is that the U.S. political system, there are term limits. I think we need that in Canada as well. Yeah. Okay, next up, we have Aiko. It's been a while. How are you? You wrote, I showed you my software as a service AI image generation tool maybe 3 weeks ago. Today, we are ready for launch. You can test the project if you want to. You can also sign up, and I'll give you the credits. That's okay. Please let me know how I can market my product. Thank you. Yeah, okay, great. So yeah, you're one of my MBA students. What you can do is in about 20 or 25 minutes during our weekly Zoom calls, you can show me the product and I can give you my humble feedback. And then our network of students from all over the world can also give you real-time feedback as well. Yeah. Okay. Next question is, do you recommending in REITs or real estate residential buildings? Yeah, if you have the money, definitely buy real estate, okay, as an investment property. And the reason is because with real estate, you can write off depreciation and the interest on the mortgage as well, okay? With a REIT, you can't do that. You can't write off, you can't write off interest or depreciation on a stock. And a REIT is basically a collection of stocks. For those of you not familiar with a REIT, it stands for Real Estate Investment Trust, which means a collection of real estate stuff you can buy that looks like a stock. There's a ticker for it. And by law, 90% of the profits have to be given out in terms of a dividend. Yeah. Next question is, if the payback period is 20 years and more for residential property, isn't it better to rent your house? No, not at all. And let me show you a quick exercise, which is going to blow you away. Okay. So, and you guys can all do this exercise with me as well. So if I go to my complete real estate course, which is available exclusively to my MBA degree program students, we're going to do an exercise together. Okay. Let's say that your monthly rent is $2,500, okay? And let's say you rent for 50 years and you think that the annual return on the stock market is going to be 12%, or the annual return on the house appreciation will be 20%. How much money is that? Well, it's $2,500 per month over 50 years. Okay, so this amount here equals $1.5 million. Now, if instead of renting, we bought a place and we got the appreciation and tax benefits and depreciation benefits, how much will this $1.5 million be worth? Wait for it. $97 million. Definitely, without a doubt, I put my reputation on the line, definitely better to buy a place rather than rent for years. Yeah. All right. How do you value a company which revenue is growing but expenses is growing the same percent? Yeah. So what you're saying, okay. So if revenue and expenses are growing at the same percent, red stuff is growing as fast as this, then that means that net income and revenue are growing at the same rate. So there's a couple of ways to value the company. My favorite way is to value it based on PE. Okay. So price earnings ratio. And a price earnings ratio, and for the rest of your life, always think of every fraction. The denominator is number 1. And what that means is this. If a PE is 10, that means for every $1 in earnings per share, investors are paying $10. Okay. Now, how much do you pay for a company when it comes to PE? Well, it all depends on the earnings growth rate. So if a company is growing 20% per year, then you should pay 20 times that $1 in earnings. If a company is growing 9% per year, you should pay 9 times that company's earnings per share, right? And that's a very simplistic back of the envelope way of understanding it. And the reason I mention that is because historically the S&P 500 trades around 15 times earnings. And the S&P historically has around 15% earnings growth. So it's a PEG, meaning price earnings to growth rate of 1. What you can also do is, if the company is not profitable or not really profitable, you can value the company based on a price to revenue multiple. And what that means is this: if a company has a price to revenue multiple of 5 times, like Manas said Palantir has, that means for every $1 in revenue, investors are paying 5 times that $1 in every $1 revenue, investors are paying 5 times for that company. Okay, meaning market cap divided by revenue. Now it all depends. Is that the right valuation? It all depends on what similar companies are trading at in that sector. Oops. You're most welcome, Ray. Yeah. Manas wrote, is FINRA important? Absolutely. So FINRA is a government agency in the United States that I hope exists. It will. You can't cut that. That basically helps to regulate financial services executives. So for example, when I started my hedge fund 8 million years ago, I had to write exams per FINRA requests just so that I had some kind of license. Yeah. Series 3, 63. When I worked at Goldman, I did Series 7, all that stuff. Yeah. And your lawyer will help you with that as well, your securities lawyer. Next question is, on the Dale Carnegie website, there are courses. The Dale Carnegie course, presentation, sales, people skills. Which one do you recommend taking in person? I'd start with the Dale Carnegie course, which is basically a greatest hits of personal growth stuff. Now, Dale Carnegie wrote a great book in the 1930s called How to Win Friends and Influence People. Please, everybody, read it or listen to it over Audible. It's a life changer. And without that book, there would be no people like Tony Robbins, who are great, and he's the reason I do what I do. But he wouldn't be as successful because that industry was pioneered by Dale Carnegie. So take the Dale Carnegie course initially. I took it when I was 19, and so did Warren Buffett when he was 19. That's one of the only things I have in common with Warren Buffett, aside from the fact he also went to Columbia. But it was a life changer. And for Warren Buffett, it really helped him with his confidence, being able to public speak as well. In fact, on Warren Buffett's wall in his office, he doesn't have his Columbia University degree. He has his certificate of completion from the Dale Carnegie course that he took when he was 19. So I would take that one. The only other one I would take, after you do that one, don't take the presentation course because you'll learn that in the Dale Carnegie course anyway. The next one I want you to take is a sales course, which I took as well when I lived in New York City, which was really helpful. I also teach you my MBA degree program how to sell. Yeah. And present and all that stuff. Yeah. I tell my students that sign up for my stuff, don't buy stuff from anywhere else, any other education stuff, because I cover almost everything. Yeah. Okay. And then Manas wrote, for the series 6, 63, all that stuff, do you need a degree for it? No. Next question is from Ake, which is, can you do a deep dive into a hedge fund analyst mindset? Nowadays, there are more tech/math-based analysts rather than financial-based analysts. Yeah, so the way it works is, so hedge funds, for those of you not familiar with hedge funds can go long and short a stock. Going long is like in football, American football, right? You're buying a stock, right? And you want it to go up. Going short is the opposite. You make money off shorting a stock, right? If it goes down. I can talk to you about the mechanics of a short if you want me to as well, which I did in last week's call. Now, if you think of your backyard, there's a hedge around your backyard that protects your backyard. Protects. And so a hedge fund protects capital. And so a lot of rich people that invest in hedge funds, their number one goal is not to make money. That's right. Their number one goal is to preserve capital. Their number two goal is to make money. And so whenever it's a big down year for the stock market, you know, people always want their hedge funds to be up a little bit or even just be down a bit, but not too much. Now, in terms of how a hedge fund is structured, you have a portfolio manager who decides on what to buy and sell, okay, or short. Working for that portfolio manager in the larger hedge funds, you have a lot of analysts. And these analysts are experts and cover one sector each. So for example, for me, I covered years ago, before I became portfolio manager, I covered software and internet stocks, right? So I was an expert, because I had to work hard, on understanding and building financial models for companies like, you know, Oracle, eBay, Facebook, whatever, all these companies. And what day in the life is you create models, you create research reports, you read all the stuff on SEC.gov for the companies you cover, the 30 or 40 companies you cover as an analyst. You go to industry conferences as well. You meet with management teams. You kick the tires to see if you should invest. And then 4 times per year, you have earnings season, which is hell, but fun, which is you're updating your financial models when companies report earnings. And based on the earnings forecast you have in your financial model, you recommend stocks to go long or short in your particular sector, be it internet software like I did, to your portfolio manager. Now, if the portfolio manager manages a generalist fund, there's going to be other analysts reporting to that portfolio manager to cover different sectors, like retail stocks, consumer staples, healthcare, biotech, which is like high growth, riskier healthcare, as well as cyclicals, energy, yada, 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 telco, hardware, all that stuff. Yeah. In terms of how do they forecast earnings and do investment research, all you got to do is look at this here, which is my 100-step program. Look at the description of this video if you want to set up a meeting with us, somebody on my team, to discuss joining my MBA program if you want to. Thank you. Okay. All right. Next up. Oh my goodness, Eric, how are you? Eric, great to see you. But Eric was actually my first MBA student that published a book called Ego Trip, I think, back in January 2nd of 2020. Great to see you, brother. Great to see you. Eric used to work at Bristol Myers, ticker BMY, as well as Apple. Yeah. So Eric wrote, hi, Chris, hope all is well. The course on AI with Luca was a great eye-opener. I created an AI app for career development. It is a humble start, and it's fun. Awesome. Nicely done. And the course that Eric is referring to is, if you sign up for my MBA degree program, you get all of my MBA electives as well, including all of my AI courses. So here are the MBA electives. That's this one here, the Complete Artificial Intelligence course. And there's a bunch of AI courses as well and all that good stuff. Okay. All right. So your question is, I can monetize this AI product, but I use it to get attention to apply for L&D, which means learning and development roles at a pharmaceutical. What do you think? Yeah. So whenever you create a product, whether it's an app, an AI product, etc., what you want to do is you want to get as many subscribers or users as possible. So usually it's free initially. Just get big fast, monetize it later. If you build it, they will come. I'll give you a great example of this. So, the founder, Evan Spiegel, the founder of Snapchat. So he went to Stanford. He's from Southern California, but he went to Stanford. And what he did was, years ago, he went and he met with a lot of venture capital firms. And he said to them, I have this app called Snapchat. And the venture capitalists that met with him, these old dudes, said, that's the dumbest business, they implied, that's the dumbest business model I've ever heard of. Why the heck would I want to take pictures of my kids and then have that picture disappear? That makes no sense at all. I'm not investing. A couple of years later, he came back to the same venture capitalist and said, hi, I'm here to raise money. We met a couple of years ago. And they were like, yeah, I remember you. They were like, well, okay, well, how many subscribers do you have? And he says, well, we got 6 million subscribers. Okay, using Snapchat for free. And those same venture capitalists were like, oh my God, that's the best business model I've ever heard of. So the bottom line is you want to focus on subs. Okay, that's the biggest driver for your company. Now, it might be a little bit expensive for you because if you create an AI product, you might have to pay tokens to ChatGPT or whatever AI service you're using. So it might get a bit expensive. If so, what I would do is I would raise capital and raise money initially from high net worth investors. And what you can do is you can always go to the MBA program, which you have lifetime access to. Go to E31, that's Entrepreneurship Semester 3, class number 1. And what I want you to do is make sure you write a full business model plan here, and then print out your business plan as well. I promise you that will help you materially with your company because failing the plan is planned to fail. And that's part of the Venture Capital Bootcamp in E31 through E35. That's Entrepreneurship Semester 3, Class 1 through Class 5. Yeah. Great to see you. And you have lifetime access to the Zoom calls as well. So, Eric, if you want, join us in less in about 10 minutes for the weekly Zoom call and share with me your product, and I can help you with a lot more hands-on advice. Thank you. And always great to see you. Okay. All right. Now, I don't have time to answer all the questions as usual. So if I don't answer your questions, just come next week, ask the same questions. Or what you can do is sign up for my MBA degree program or set up a call with my team to discuss joining the program, because starting at 10 a.m. today, I have Zoom calls, the weekly Zoom call for you guys. And if you want to do daily Zoom calls with me, what you can do is you can join one of my newer higher end MBA products. Just go to harounmba.com/FAQ, and you can check out my MBA Accelerator. You get 350 hours of Zoom calls with me throughout the year. Okay, group Zoom calls every day of the week. It's a good deal. An executive, you get 3 hours of one-on-ones, and then Diamond, just book a call. It's 10 hours of one-on-ones. Yeah. All right, but let me see if I can squeeze in as many answers to questions as I can right here. Next question is, you once said your boss would be mad when you short indexes, yeah, and would ask you to research on stocks and short it. Where were you and at what position? Yeah, I was an analyst at Citadel. That was either probably 04 or 05. And he wasn't mad. He was nice about it. But basically what I was doing was in order to offset some of the risk in my long positions, I was shorting ETFs. And he said, Chris, it probably makes more sense to do research on the top positions in the ETF and then pick those individual stocks to short as well. He's a smart guy. He did incredibly well in his career. And I'm proud that I worked for him. It's a good dude. He also taught me this. He said that he learned that investment trends last longer than you think. Another thing he taught me was, let me think of what did he say again. This is a good one. He said, things are never as good as they seem. And things are also never as bad as they seem. And because I'm a positive person, I pitched a lot more longs. And then he told me, he said, every time you pitch me a long, I want you to pitch me a short as well. Yeah. Great guy. He's been good to my family. All right. Next up, what are your thoughts on the market impact from tariffs likely starting next month? A lot of it is already priced in. And I think if the market goes into a tailspin, I think Trump will reverse course pretty quickly. Yeah, because he says if he implies he doesn't look at the S&P, he does. He does. Yeah. Any thoughts on growth potential of drone industry and defense stocks? Yeah. Defense stocks tend to do better in eras where there's geopolitical tension. So I remember after 9/11 happened, I invested a lot in Lockheed Martin, ticker LMT, as well as GD General Dynamics and NOC Northrop Grumman, which makes tankers as well. Yeah. And what you want to do is you want to look at those companies on a historical price to revenue basis as well, because they are cyclical companies. Yeah. In terms of the drone industry, I would assume that it will do well over time. Whenever I look at investing in a stock or a sector, I always like to ask myself this question before doing any research. In 5 years, will this company be more relevant or less relevant than it is today? And will the sector be more relevant or less relevant than it is today? And if the answer is yes, I'm like, okay, let's start doing research. If the answer is no, why am I wasting my time? That's a long idea. Yeah. Yeah, and Ake wrote, hedge fund minds are great. Ray Dalio, Ken Griffin, and many more. Yeah, smart people. Yeah. Okay, Manas wrote, fun fact, B.com, or a Bachelor of Commerce, yeah, is offered only by Commonwealth countries and former colonial countries like India, Australia, Canada, New Zealand, UK. That's right, yeah. Yeah, Bachelor of Commerce degree does not exist in the United States. Yeah, I did a BCom. We say BCom, be cool. CJ wrote, any opportunities to profit from tariffs, like doing leaps or options on specific stocks or sectors? Yeah, so you're talking about going long an options instrument over the long run. So a leap, for those of you not familiar, means investing in a call or a put over the course of 1 to 3 years. Yeah, they're usually not that liquid unless it's a large cap or a company that trades a lot. So what I would do is do your own investment research, say it with love of my heart, and decide what companies you think are worse off. If you think, Alexa, please stop. If you think the auto industry is going to be decimated because of this, then maybe think about, after you do your research, buying puts on your least favorite automakers and vice versa, right? If there are certain domestic companies that will do incredibly well and they don't have much overseas exposure, they have domestic exposure mainly, and they will do incredibly well because the tariff walls means that more American companies or people will buy directly from them. That sounds like a good long option, meaning buy a call, a leap on that stock in 1 to 3 years. That matures in 1 to 3 years. And you can always use the materials in the MBA degree program. Step 1, to do your investment research on the 100 steps for investing. Then step 2, the option stuff that I showed earlier today. Okay, and I do have to wrap this up in a minute, guys. Okay. All right. You're most welcome, CJ. And then a question is from V, who wrote, I'm from a third world country. How do I get into trading in the United States? I'm going to get down on my knees because I care. Okay, I care about my students and anybody on these webcasts. Here I am. Hey there. Please, I'm begging you, don't get into trading. You will lose money in the long run. I promise you. Why? Because stocks go up and down for random reasons in the short run. I don't know what Trump is going to say tomorrow that might make markets go up or down. I don't know what Putin is going to say tomorrow. I don't know what the economic statistics will be from Germany or the United States released in the next week. I don't know what certain CEOs from certain companies are going to say in the next week or so that's going to make stocks go up or down. I don't know about geopolitical uncertainty overseas in certain regions that is going to make the price of oil go up or down, which influences all stocks or most stocks. So please be long-term focused always. And I do say that with love in my heart. Yeah. Next question is, what about China stocks like Baidu, Baba, Tencent? They are looking cheap. Also, Chinese government is aggressively forcing growth and liquidity. Real estate problem is going down. Your thoughts? Yeah. I don't mind investing in Chinese companies that are ADRs, meaning American Depository Receipts, that are large companies on major U.S. exchanges after I complete that 100-step framework that I showed you. Yeah. But the accounting does worry me a bit, to be honest. Okay. All right. Eileen wrote, lastly, I'll be working on my own informational meetings. I'm in my 50s and curious if there's something else for me out there. Yeah. Eileen, it is so good to see you. Join me in about 2 minutes on the weekly call. Just use the Zoom address you usually use for meetings with me, and I'd be more than happy to help you out. Yeah. Okay, guys. All right. I see there's tons more questions. I can't answer them. If you want to do a one-on-one meeting with me or somebody in my team to discuss, join my MBA degree program. Go to the link in the description of this call. If you're already an MBA student, I'll see you in a couple of minutes on our weekly Zoom call. If you're interested in doing daily Zooms with myself, group Zooms, you can always go to harounmba./ all lowercase FAQ and sign up for one of these programs. If you have questions about the program, you can always click this blue box here you see here to set up a call with me, with my team as well. We're growing a lot. I just hired, I think, another 5 to 10 employees or so. We're going for it, guys. We're going for it. All right. God bless you guys. Have a wonderful week. I'm going to end this call with a video that I licensed. It's a Steve Jobs interview. I licensed it from the Silicon Valley Historical Association. That's life-changing. It's very short. Please check it out. God bless you. See you next week and every week at 8 a.m. Pacific time. Thanks.
When you grow up, you tend to get told that the world is the way it is, and your life is just to live your life inside the world, try not to bash into the walls too much, try to have a nice family life, have fun, save a little money. But life, that's a very limited life. Life can be much broader once you discover one simple fact, and that is everything around you that you call life was made up by people that were no smarter than you. and you can change it. You can influence it. You can build your own things that other people can use. And the minute that you understand that you can poke life and actually something will, if you push in, something will pop out the other side, that you can change it, you can mold it. That's maybe the most important thing, is to shake off this erroneous notion that life is there and you're just going to live in it, versus embrace it, change it, improve it, make your mark upon it. I think that's very important. And however you learn that, once you learn it, you'll want to change life and make it better, because it's kind of messed up in a lot of ways. Once you learn that, you'll never be the same again.